The Kraft Heinz company, stock ticker KHC, is currently trading at $37.63. Year to date, they are down 7.7%, and over the last year, they are roughly even to where they started. There are some articles on Seeking Alpha where they are very bullish on the stock, but growth may remain challenging for the company given its focus on mostly packaged and processed foods. Overall, Kraft Heinz portfolio of branded food should continue generating solid cash flow in good times and bad times. The management is also focused on addressing years of underinvestment across the company's products. However, Kraft Heinz may continue to face an uphill battle to breathe new life into some of its aging brands. Along with the firm's elevated debt load, this will likely keep a lid on Kraft Heinz earnings and dividend growth. But let's jump into our stock screener and try to punch in KHC to try to take a look at the intrinsic value of Kraft Heinz company. The PE non-GAAP forward ratio is 13, which is roughly in line with the 5-year average. The dividend yield is 4.25% at the current time. The payout ratio is a quite high 83%. Coupled with the comments before, this should be something you should take a further look into. The analyst target price is $42.83. The EPS growth is at negative 10% almost, and the return on equity is at 5%. Let's jump into the dividend data tab to take a closer look at how the dividend data looks like. And you can see ever since 2019 to 2023, the dividend has remained the same, so zero dividend growth. Actually, it has also been sliced a couple of times. You can see here minus 36% in 2019. So the long-term dividend growth rate is simply not there, not even the short-term dividend growth rate. So this is a stock where you would probably most likely buy it because you are interested in the current yield, because it seems unlikely that any growth will come, at least in the near term. And if we scroll down a bit, you can see here currently the dividend yield, according to dividend yield theory, puts it at a reasonably valued stock. As mentioned before, whenever this goes down into the red, then it's overvalued, and when it goes into the blue up here, it is undervalued. And right now it seems pretty reasonably valued right at the line. Also coupled with a PE forward ratio at the 5-year average also suggests it is reasonably valued. But let's jump into the different valuation models we do have. First one, Graham's Vice Valuation model, where we do take the EPS, the PE of an outsourced company, combine that with the growth rate, the average yield of AAA corporate bonds, and the current yield of AAA corporate bonds, puts the intrinsic value of Kraft Heinz at $17. Jumping into the discount cash flow model, you can see here that their discounted cash flow is, or their cash flow is all over the place. Sometimes it's up 124%, then it's down 149%. So I've put the growth rate at a very conservative 3%. Coupled with the cash and cash equivalents, the total debt, the shares outstanding, it puts a fair value at $4.64, so quite low. As mentioned earlier, the dividend growth has been completely lagging, so I have just applied a single percentage of growth rate for the next year perhaps. Combined with a weighted average cost of capital of 5.3%, we arrive at an intrinsic value of $37. The multiples valuation put them at $44, where we compare them to General Mills, Hershey, Danone, Kellogg's Company, and Hormel Foods. For the next one, the free cash flow valuation, they have an intrinsic value of $232, which is obviously extremely high, but you can see here the price to free cash flow ratio coming out of 22 was very high. So probably we struck a pretty good year for them. And combined with the free cash flow per share also being positive and quite high, then we arrive at this intrinsic value. Lastly, we do have the Peter Lynch model, which puts the intrinsic value at $18.60. Before we jump into the summary, if you've come so far, thank you so much for watching. If you haven't subscribed already, please do so, and please like the video. Let's jump into the summary, where we do have all our different valuation models. Also, we do have the free cash flow valuation at 232. If we just use them as they are, we arrive at an average intrinsic value of $59. With the current price being $37, it could indicate that an average current discount is 36%. But if we do want to toggle off the free cash flow model, then we do arrive at an average intrinsic value of $24. Again, with the current price being as it is, the average current discount is minus 50%. But let's try to toggle it on and then put in a very high margin of safety of, let's say, 30%. then we arrive at an acceptable buy price of $41. With the current price being 37, it could indicate a pretty reasonable time to buy. So if you do want to own Kraft Heinz company for the dividend, I think it's a fairly reasonable time to buy in, but conservative income investors may prefer to own businesses that have stronger portfolio of brands aligned with today's trend, a healthier balance sheet, and a better record of delivering growth. Thank you so much for watching. I'll be seeing you in the next video.